So thank you, everybody, and thank you for joining us again on another update in relation to COVID-19 and what's happening. This is our sort of second update session, and as with the previous session, we'll focus on things that have changed from the previous from the initial session and then the previous update. So we'll just focus on things that are new and that are worth sort of the highlighting to people in relation to COVID-19 as things are moving at a pace. I'm pleased to be joined today by my colleagues Richard Maitland, Greg Taylor and Gavin Davis, and we're going to, between us, cover updates to the Coronavirus Job Retention Scheme, the Self-Employed Income Support Scheme, general funding and the options that are out there, and then also an update in relation to IT and particularly with the potential risks around cyber and cyber security. Clearly there is a Q&A as we go through. Some questions have been submitted in advance, so we'll look to answer those as part of our sessions, and we'll endeavour also to answer the participants' questions on the Q&A section of this webinar as we go through. So without further ado, I'll crack on and cover the updates to the Coronavirus Job Retention Scheme. We've had quite a few updates in the last 2 weeks, and we've even had several updates since the biggest sort of announcements on the 15th of April. So this is a very fluid situation. Clearly, this is a very large initiative that's been launched by government, very ambitious to get this all launched and up and running in such a short space of time. I know that Jim Hara, when he was interviewed by the Treasury Select Committee, was saying this is a project that would normally take more than 2 years to get off the ground. So I think they've done a phenomenal job, but as always, there will be things that are sort of tweaked and amended along the way. So the current sort of notable updates are that the Coronavirus Job Retention Scheme portal is now open. It's been open since Monday morning. We've heard of a large number of claims that have gone in. Certainly not all of them, as it's quite a complicated process to calculate the claim, but certainly we haven't heard of too many troubles in using the portal. We've not heard it falling over, and people have obviously successfully submitted claims. Clearly, there will be a few days for those claims to be processed before the money hits the bank, but obviously the government are, have thrown a lot of resource at getting this portal up and running. They've also extended the scheme so that it will cover furlough pay up to the end of June 2020. Clearly, we've had an extension with lockdown, and then beyond lockdown, there will be the starting of the easing of that, and then the start of our recovery period. So they've welcomed that by extending that to cover 4 months now. That covers the whole of March, April, May and June, but it's unlikely that people will be in furlough for the whole of March, but that's the period that it covers. They have clarified that foreign nationals on UK payrolls are covered, if there was any ambiguity about that. And they've also clarified that for somebody to be furloughed, that needs to be with the agreement and discussion with the employer, who then follows that up with a written notification of furlough, which needs to be kept for 5 years. So I think we can see what they'll do in relation to auditing this arrangement. But the employee doesn't actually have to provide a written response to that letter. That's a clarification for the purposes of the furlough scheme. But of course, you need to consider all sorts of employment law considerations, and therefore consultation and express consent and sign up to these arrangements is always a good idea, but it's not a necessary requirement for HMRC when they come to audit these arrangements. There does need to be a letter, an agreement to employees to furlough. Employees can take holiday whilst they're on furlough, and they've now clarified that under the working time regulations, holiday pay, so if people do take holiday, and therefore it is proper holiday pay that's being paid rather than furlough pay, that needs to be paid at the employee's normal rate of pay, or the average pay in the previous 52 weeks. So that's a working time regulation direction, and clearly that will be an amount that can't be fully recovered under the furlough scheme. The furlough scheme will be limited to 80% of that holiday pay, And so people need to be mindful of that if allowing employees to take leave whilst they're furloughed. Annual leave will continue to accrue whilst people are furloughed because they're still employed even though they're not working. But obviously it's then a negotiation as to when that leave is taken, given that there is an amount that would need to be remunerated for that holiday that couldn't necessarily all be covered by the furlough scheme. Bank holidays. The guidance currently is that if an employee normally works their bank holidays, then that would just be normal furlough pay that would apply and that would be covered by the grant. If, however, employees normally take bank holidays as holiday, then that is holiday, and then holiday pay applies under the working time regulations, or you could perhaps seek to negotiate a future day off in lieu for that bank holiday. So slightly different in relation to whether this is annual leave or whether it's a bank holiday that's being sorted. All of the grant, which I think they had already said in the past, all of the grant needs to be paid to the employee in the form of money. So no groats this time, but no part of that should be netted off. So where people have salary sacrifice arrangements, you can't use the furlough grant claim money to pay for that salary sacrifice. The grant claim money that comes through has to go to the gross pay line and be paid to the employee as money, and any salary sacrifices need to be funded from other pay and by the employer and employee in some other way. In terms of the calculation, there are different calculations, clearly, whether somebody is salaried or paid irregularly. It's still the 80%, it's still the £2,500 a month cap. But the guidance says that employers can choose the calculation method that best fits the way their employees are paid. And on that basis, HMRC will not decline or seek repayment of any grant based solely on the choice of payment calculation, as long as that calculation payment method that's used is reasonable and is the reasonable choice and the reasonable approach has been made to that calculation. So that's helpful where people are unsure. And in terms of the portal itself, after submitting the claim, employers should note the claim reference number. So they will, when you get to the point of clicking the button to put to submit your claim, the screen will show a claim reference number. You need to make a note of that because they will not send you a text or an email confirming that your claim is successful or what that number is. You therefore also need to retain all records and calculations because there won't be an audit process in terms of the portal. And obviously HMRC may contact you about the amounts you've put on the portal, so you need to make sure you've got your own record of what those were, what the amounts were, how they were calculated, in case that's required for clarification before a claim is processed. And then the funds are expected to take up to 6 working days after the application to get to you, provided your claim matches the records that they have. So that's that you've got a valid PAYE scheme as of the end of February, that scheme is registered for online submission at the date that you make your application, and also that the individuals on your furlough claim through the portal are those that are known to HMRC because they have been on a previous real-time information submission, which will either be the one for monthly people at the end of February or the one for weekly people. And so those submissions need to have been in with HMRC by the 19th of March, because otherwise they will have a claim for somebody on the portal that isn't known to them on the PAYE scheme records that they have electronically, and that could impact your claim. And the commitment is that if your application is completed successfully by the 22nd of April, then they're pretty much guaranteeing that the funds will be in your bank account by the 30th of April. Now, HMRC will, as always, check claims and they can withhold payments or seek payments to be repaid in full if the claim is based on dishonest or inaccurate information was found to be fraudulent in some way. And also we can expect a review process after the scheme is all finished, so after June, I think we can expect HMRC will undertake risk-based reviews, and as I say, they're giving themselves probably up to 5 years to do that, to see if there are any elements of claims that are not correct and therefore need to be repaid. Some of the questions we've had, good news that somebody is saying that they've successfully submitted their first claim for less than 100 employees. But some of the questions suggest that there may be some difficulties in the next claim because furloughed employees perhaps have come back to work, or they're being furloughed for the first time, or they will continue to be furloughed for the whole month. There are perhaps some teething problems. We clearly will feeding in to HMRC, and they obviously have email addresses, just so that some of these things don't become an issue. One thing that is clear is that you need to make sure that for each claim you make, so you can make one claim for each pay period. So clearly there's monthly pay periods and there are weekly pay periods, but you need to be mindful of the dates. So make sure dates don't overlap in relation to your claims, because that is something that the system has a problem with, and therefore you need to think very carefully if you make claims for weekly paid people each week, and then you come to do your monthly claim, because there may be an overlap of claim period dates that you need there maybe to sort of regularise that, merge maybe a weekly and a monthly claim to make sure that it gets processed. Somebody's asked if staff in the care industry can be furloughed, as in those shielding for 12 weeks or more. The guidance is very clear, yes, you can. If somebody is unable to work because they're shielding in line with public health guidance, or they need to stay at home to be somebody else who is shielding, they can be furloughed. So with agreement, you can seek to furlough those people, which could be a lot more beneficial than their current remuneration status or maybe even sick pay. People can be furloughed multiple times, and that's correct. So the question is, does that allow me each month to have an employee work for the first week and then be furloughed for the remaining 3 weeks, and then restart the cycle again? The guidance is very clear that employees must be put on to furlough for a minimum of 3 consecutive weeks. It then is also very clear that they can be furloughed multiple times. The wording we're concerned about is that it says each separate instance must be for a minimum period of 3 consecutive weeks. So whilst it doesn't expressly say that somebody has to come back for 3 weeks after they've been furloughed for a minimum of 3 weeks, our belief is that's the intention. So it could be risky to furlough somebody for the 3 consecutive weeks, bring them back for, say, a week, and then seek to furlough them then for another minimum of 3 weeks. I'm not sure the intention, given the wording, is that cycle would be successful. But it is slightly unclear. So certainly what's very clear is that when somebody is on furlough, they need to be furloughed for 3 consecutive weeks at a time. The non-furlough period, we think, suggests also needs to be 3 consecutive weeks, but that's not exactly what it says. One of the other questions is, for people on irregular hours, calculate holiday pay accrued. Is this based on the pay reference period in the last 12 months? The short answer is yes. I think we've covered the payment of holiday pay being at the full working time directive rate. If there's a mistake during the upload, can it be corrected the following payroll month's upload? We expect the answer will be yes. You cannot, once a claim has gone in for a period, it has gone in. So you can't keep going back in and repairing it. There's sort of no, as you're doing a claim, there's sort of no save and return to it later on. It's a single process. You've got to put the claim in. If you subsequently put a claim in and find that after that you've made an error, there is an expectation clearly that you will repay to HMRC amounts reclaimed in error. I think whilst the portal is open, the most effective way of doing that is obviously to maybe just amend the next period's claim. That would seem to be a reasonable way to do it, as I think HMRC have enough volume in relation to the job retention scheme in dealing with claims and dealing with queries to the thought that they might then immediately start opening up another process for you to repay monies that you've inadvertently incorrectly had, it could be a bit of a step too far at this moment in time. So I would suggest that if you feel that you've made an error through interpretation or just through putting the wrong numbers in, then obviously make a note of that and be very clear when you submit the next month's claim and you make that adjustment, that you've got a clear audit trail such that if HMRC audit this in 12 months' time, they can see the amounts that you've claimed and where you've kind of made your own adjustment, so that overall you've only had the appropriate amount of money from the government. One of the other questions, the final question, is that somebody says, I understand that companies will not be entitled to the furlough payments if pay cuts have been implemented and pay has been deferred. I suppose that could be the case. Obviously, for qualification for the job retention scheme, the individual must be furloughed and therefore not undertaking any work. Now, that's a different scenario to what you decide to pay them. You may decide to still pay them an amount of money whilst they're not working, and some or all of that you may be then able to claim under the furloughed scheme. But if you've just reduced people's hours and they're still working for you, then they don't qualify, even though you've entered into some kind of deferral arrangement to make good to those employees later on. So it's around their work status and then looking at the amounts that you can claim under the scheme. So that was the updates in relation to the job retention scheme. Quite a few in the last couple of weeks. I think we expect that to slow down quite a bit now. So I'll now hand over to Richard Maitland to cover the self-employed scheme.
Thanks a lot, Nigel. And yes, I'm going to talk now about the government's Self-Employment Income Support Scheme, or SEISS. This was announced more or less in tandem with the CJRS that Nigel has just been talking about. But clearly the self-employed scheme is directed at those who are self-employed rather than employees. Just over a week ago, on the 14th of April, the government issued updated guidance on the self-employed scheme. So this session today is largely to update on the new developments, but also to recap some of the fundamentals of the self-employed scheme. We have had some questions in advance, that the main one being, what is the process to go through to apply for the government grants under the self-employed scheme, and when do we need to start this process? Both of which I will cover now. So the basis for the self-employed scheme is that eligible self-employed individuals will be able to claim direct cash grants from HMRC. Again, similar to the scheme that Nigel was just talking about, this is based on 80%, not obviously of employment earnings this time, but on an average of monthly trading profit over the last 3 years, but with a similar cap at £2,500 per month. Self-employed grants are taxable, so individuals will have to report them on their tax returns, but they do not need to be repaid. Available initially for 3 months to the 31st of May 2020, but this may be extended. It hasn't been officially extended in the same way as the CJRS, but I guess time will tell as to whether that will happen. So as the questions in advance asked, clearly eligibility is key here. Who is going to be eligible to claim a self-employed grant? Well, individuals must already be in self-employment and have lost trading profits due to coronavirus. They must have traded in tax year 2019-20, be trading when they apply, or would have been trading except for the coronavirus situation, and also be intending to continue to trade in the current tax year. So previous tax year and the tax year which has just started, 2021. Critically, there is a means tested limit for the self-employed scheme of £50,000 of trading profits. So individuals with higher trading profits will not be eligible for grants under this scheme. Other support may be available, but not specifically this scheme as it is currently set out in guidance. Also, critically, a tax return, at least one tax return, must have been submitted for 2018-19 for the individual to be eligible for a self-employment grant. If they have returns over the previous 3 years, so 16-17, 17-18 and 18-19, 1, 2 or 3 of those returns will be taken into account, but as a basic minimum, subject to one minor exemption, which I'll mention, it is important to have at least that 2018-19 return filed with HMRC. The deadline for doing so has been extended until tomorrow. So obviously the deadline would have been, or was previously, the 31st of January, but if any self-employed people want to make or anticipate making a claim, then that return, and they haven't already submitted their 18-19 return, you do have until tomorrow to do so. However, amendments after the 26th of March, when the scheme was first announced, that have already been submitted, so returns that have already gone in, any amendments after that 26th of March date will not be taken into account. Another key eligibility criterion is that more than half of the individual's total income must have come from self-employment. So whatever the basis period of returns that is being used, one of those, either the 1, 2 or 3 of those years, that will need to be 50% at least self-employed income. So you can have a mix of employment and income from other sources. Just to recap on a key provision that's already been announced, where we have a personal service company, typically, not exclusively, but typically with a single director shareholder, they will not be covered by the self-employment scheme unless they pay themselves a salary under a PAYE scheme, and therefore may be eligible for the CJRS scheme that Nigel just mentioned, but they're not directly covered by the self-employed scheme. And so therefore those who take, for the most part, dividend payments from their company will not be covered potentially by either scheme. So you may have seen the commentary, the lobbying that is out there to seek support for individuals in that position. Currently, that support has not yet been forthcoming. The self-employment scheme, however, does cover members of partnerships. So self-employed people through LLPs and others will be covered. So some of the special circumstances to mention are that individuals who have received payment in the form of loans or other credit covered by the loan charge may be able to claim under the self-employed scheme, but their trading profits will be based on either the average of the 2 tax years, 16-17 and 17-18, or 17-18 alone if they were not self-employed in 16-17. And the deadline for these individuals to file their 18-19 return is the 30th of September 2020. If there are any self-employed farmers claiming farmers averaging relief, HMRC will use the amount of profit before the impact of this relief in determining eligibility and grants under the self-employed scheme. So the key, one of the key elements of the updates from last week was that HMRC has set out more detail on how the total income and trading profits will be calculated for the purposes of this scheme. So total income will include income from earnings, trading profits, property income, dividends, savings, pension, and other income sources. Trading profits will be based on individuals' tax return figures for trading profits, less any allowable expenses. And rather than me reading the long list of allowable expenses, do get in touch if you need any help on the detail there. But it's all of these sort of allowable business expenses that you would typically expect. Any losses carried forward from previous years and the individual's personal allowance, however, will not be deducted from trading profits. So the key question about when the scheme will be up and running and when payments will be made, well, HMRC hopes to start making self-employed grant payments from the beginning of June 2020. These will be backdated for 3 months to the start of the scheme from the 1st of March and paid as a single lump sum. HMRC is going to review individuals' tax returns to determine who is eligible and then invite them to apply. So unlike the CJRS, where employers can make the claims themselves directly with HMRC and obviously hope that those claims are accepted and that payments are made as a result, with the self-employed scheme, it is very much as advertised that HMRC will contact eligible individuals, that they are saying to individuals, don't contact us, we'll come to you. And they aim to start doing that by mid-May 2020. Applications will be by way of an online form where we expect individuals will be asked to verify that they are still trading as self-employed and confirm that their business has been adversely affected by coronavirus. HMRC has said it will take its usual risk-based approach to compliance, and that an alternative way to claim will be made available for those unable to claim online. Grants will be paid in cash directly into individuals' bank accounts in single instalments. So for those individuals who may not be eligible for the self-employed scheme, HMRC has advised that they may still be eligible for other forms of support, such as the Universal Credit or the Coronavirus Business Interruption Loan Scheme. And individuals who are eligible for the self-employed scheme may also be able to claim that support in the period before the scheme is operational. And grant payments from the self-employed scheme will be treated as part of self-employment income, and so may actually affect the amount of universal credit that individuals receive, although universal credit claims for earlier periods will not be affected, we understand. So that hopefully is a helpful recap on the position for the self-employed scheme, updated, as I said, for the latest guidance from last week. We expect, of course, further guidance to be issued in due course, and of course, the actual scheme rules, the legislation itself, in due course. This webinar, future webinars like it, will be used to update you, and do let us know if you have any questions. With that in mind, I will pass over to my colleague, Greg Taylor, to discuss government finance support for business. Over to you, Greg.
Brilliant. Thanks, Richard. Afternoon, everybody. So I'm going to touch on a couple of the government funding schemes today. So on Friday, the government launched the Coronavirus Large Business Interruption Loan Scheme, or CLBILS. It provides an 80% government-backed guarantee to the lender and is accessible for businesses turning over between 45 and 500 million. That is then split down into two separate sections in terms of the amounts available to those particular businesses. So if you turn over between 45 and 250 million, then you can borrow up to 25 million. And between and from 250 million up to 500 million, you can then borrow up to 50 million. Those schemes can be used for a number of different types of facilities. So they can be used for term facilities, so loans. They can be used for revolving credit facilities, RCFs, including overdrafts, but they can also be attached to things such as invoice finance and asset finance. There were a couple of interesting bits when the scheme was announced. So on the government website, pre the formal announcement, they gave an overview of the facility, and there were a couple of bits that are missing from this announcement when the full details came out that were on the government website. So the first one was that the government website initially said that you had to be offered, or be turned down for rather, normal commercial lending as per the smaller CBIL scheme was originally launched. In the first instance, before you qualified for this larger scheme, the CLBILS one. That is now not the case, and you can go straight to the scheme, is our understanding, straight to the CLBILS scheme. The other one was that it said that there would be no interest-free or capital repayment holiday, and as there is with the CBIL scheme, the lower scheme for businesses under 45 million, and that has gone, but that is still, it's not officially listed, but it is still the case. So if you turn over more than 45 million and you apply for a CLBILS government loan business interruption scheme, then you will still have to pay capital and interest repayments from the beginning. The terms of these loans, again, are much shorter, so they're only over 3 months to 3 years. So, and accessible fundamentally at this point only within the high street banks. There are a number of different bits and pieces that you will need, and we'll cover this more in the the CBILS one when we talk about some practical help that hopefully we can give you. But you will need to know the amount you want to borrow. The lender will check that then the amount that you have asked for is suitable for business purposes and is the right finance for your needs. And the period over which you will make the repayments, the lender will assess that the loan is affordable for you. To do that, you will need to provide management accounts, a cash flow forecast. My recommendation is a minimum of 12 months, a business plan, short form, historic accounts, and details of assets, because security on these particular loans for the larger CL bill scheme can be taken. So again, you will need to be aware of that if there are assets in the business that are unencumbered or already caught under a debenture, that the bank can leverage further, then they will look to do so. I think that's pretty much all the detail we have on that at the moment. Clearly, applications have just started to be made. The scheme opened up on Monday. As it goes, we'll report back on how it's gone, any sort of blocks that are happening, any kind of feedback as to why applications are being turned down or being delayed or whatever else may be happening. The key one that I really wanted to touch on today was the practical advice around the lower CL bill scheme, which is for a turnover up to £45 million. Clearly, the scheme has been in effect now for nearly 4 weeks, and money is starting to get out at a faster rate. I think it's really key when you're putting this application in, and one of the things that we seem to be, that borrowers seem to be missing, is understanding what the scheme is for and its rules, so that we can assist you in making a successful application. So in the first instance, this is a loan, this is not a grant. This is not the government simply giving out money to help a business. There are rules around how the money can be given out. And if an application does not tick all the right boxes, then the applicant won't get the loan. The CBILS scheme is only for working capital facility, only to be used for that purpose, although it can be repayable up to 6 years. The scheme is not a one-size-fits-all scheme. It has rules and guidelines, and you must, or the business must be viable or deemed to be viable pre-COVID-19. And the bank's starting point for that is the 2019 accounts, be they draft, filed, or management accounts for the period. So first off, an applicant has to convince a lender that they are viable. And if they cannot do that, the lender cannot approve it under the rules of the scheme. They then have to convince the lender that the loan is affordable. And those are the real two keys to the CBILS scheme. Once the question of viability and affordability, the other areas that we would urge borrowers to look at on their applications are as follows. You need to show that you have already used all other forms of relief applicable that are available to you, as we discussed, furloughing employees, VAT deferment, rate reliefs, etc., etc. Clearly show how the difficulties that you are experiencing are due to the pandemic. Demonstrate that the loan will be used for business critical payments. This is not the same as business as usual, and inevitably there are going to be some grey areas to what constitutes business critical and what doesn't. We need to understand that this loan is really used to cover the key cost of keeping a business running while part or all of the business is being mothballed. Demonstrate that the loan can be repaid and clearly explain concisely your reasonings and assumptions behind the cash flow. Explain how you will get up and running when restrictions are lifted and how you will recover and generate profits after that period. Another point to stress is that applications need to be succinct and easy to follow. You need to understand it isn't easy to remember that they're looking at a lot of different applications, and if your application does not have all the information and the banker has to wade through pages of expansive text, it is going to make it very hard for them to agree an application. It's worth spending a few days just to think about an application and to get it right, which will go through much quicker. For example, we helped a client and submitted an application on Wednesday last week. which took 3 days to prepare. There were a couple of questions on the Thursday, and then the loan was approved on the Friday. Rushed and incomplete applications are likely to just get bogged down in the system and take much longer, or still worse, might be declined. And that is a really key point, to try and put this in a real package so that the lender has all the information they need. So fundamentally, you do need 3 things. You need your management accounts, you need your year-end accounts, that classes as one. You then need a cash flow forecast over 12 months, which clearly identifies the need for the loan and clearly identifies how the loan can be repaid. And thirdly, you then need your application statement, which highlights, as we discussed, how COVID-19 has affected your business and how you plan to get the business up and running again, and in what time frame you think that you can do that. If you cover those points, then we would expect that the rate of approvals will go up. I've just seen some stats that have come through from the British Business Bank to say that it's only around 2% currently of applications that are being approved, although the approval rate has gone up 3-fold from last week, which is very good news. There are lots of other options should you need or be turned down for receivables loan. If you need finance and been turned down for receivables loan, there are new lenders now being approved by the British Business Bank and coming on board, which will offer the receivables facilities such as Funding Circle, and we know of others that are in the pipeline where the criteria will be different. They will have their own lending criteria within the receivables rules, which may make it easier for you to obtain a receivables loan, particularly where the level of loan is below, say, £250,000 that is required. We have a template for the planning and a business case template. If anybody would like a discussion about that or to talk about that, then we're happy to try and assist so that we can get through as many of you as possible to get this crucial funding that you need. And with that, I'll hand on to my colleague, Gavin Davis.
Thank you very much. So good afternoon, everyone. I'm the partner that heads up our technology advisory services practice, and I advise clients on IT matters. And I just wanted to spend a few minutes talking to you about some of the issues that our clients have been facing with their IT systems and some of the security issues that you should be aware of. I'll also talk about some of the things that you can put in place that will help your business should we find ourselves in a similar position in the future. So hopefully, and where possible, most businesses will be operating remotely by now, but many will have struggled to get the IT set up and prepared in time for the lockdown. Some businesses will have backup IT systems that provided resilience if access to primary production environments is lost. Call centres, for example, often have alternative locations that they can be used for relocating staff if the main premises become unavailable. But when everyone has to maintain social distancing or self-isolation, this presents a slightly new challenge that we need to address. So the growth of high-speed home and mobile broadband has allowed most businesses to provide remote access to systems, and indeed many businesses now encourage it since it reduces the need for office space. However, COVID-19 has presented some new IT challenges that many businesses were certainly unprepared for. Some of our clients have contacted us and said that their staff were using desktop PCs that cannot easily be relocated into a home environment. Some staff don't have an internet connection at home, or it's slow, or they have a small data allowance. Internet connectivity for the business perhaps doesn't have the capacity to support the entire workforce or a large portion of it. VPN connectivity, sometimes if it's a small home office router or firewall, will only have a limited number of licenses that will allow you to set up a VPN. So only a handful of staff can connect remotely at any one time. And also things like telephone systems. Older systems are sometimes very difficult to redirect, and users may not want to use their own mobile devices. By now, most businesses, I hope, will have found workarounds for most of these, but it's important to consider that the additional risk that some of these could bring. For example, if staff are using their own PCs to access office systems, are they secure? Have they got robust firewalls and antivirus protection installed? Are the passwords strong enough and changed regularly? And how are staff connecting to the office? Are they controlling their desktop PCs remotely, or do they have applications installed locally on their laptop or PC at home? There are, of course, several ways of connecting to systems remotely, but these should always be reviewed very carefully to ensure they don't introduce additional risk into the business environment. As an example, for several years, Microsoft has provided a system called Remote Desktop, sometimes referred to as terminal services. Once this is enabled, it allows a user to access their desktop PC remotely. And this is a great solution as long as the internet connection is fast and stable enough, as it allows a user to do most of the things that they could do while in the office. However, it does have some serious security flaws. A key feature of Remote Desktop is that it allows a user to connect directly to the office and take control of a PC without using a VPN, a virtual private network. But unfortunately, hackers have found a way to capture usernames and passwords and use them to access these systems. This vulnerability is known as Bluekeep, and you can find out more information if you Google it. And it's a vulnerability that's been around for a number of years. In fact, it goes back to Windows 2000 when it was first introduced. And some more recent vulnerabilities have been found in the more recent operating systems up to Windows 10. So any operating system, Windows, Microsoft operating system that you're running from Windows 2000 upwards has the potential to have this vulnerability. And a lot of systems have not had the patches installed. Microsoft has fixes in place, but there are still thousands of systems out there that haven't had the patches installed on them. And certainly in the security community, the use of Remote Desktop is a major concern, and many advise against it, even if the systems do have all of the latest patches installed. However, Remote Desktop can be made extremely safe by accessing it through a VPN rather than directly over the internet. The VPN provides a secure connection to the office network, and then the Remote Desktop is accessed through it. Now, this does require some additional configuration, but it is the preferred method, and it's much more secure. So if you are using Remote Desktop, then it's certainly worth asking your IT team or support provider to check that it has been patched, or if you are using a VPN to connect, which is certainly the preferred approach. Which method you choose to provide remote access is vital that you consider the security aspects to ensure that it doesn't compromise your business and put it at any kind of risk. Which brings me on to my final point. Once this is all over, I'm sure you'll be thinking, how can we be more prepared in case this happens again? I recently published an article on our website that discusses some of the points that I've already mentioned, but it also talks about being prepared in case we are ever faced with similar challenges. But of course, we need to know what these are likely to be. And we can find this out by conducting a risk assessment. Now, although the risk assessment is vital, it should be across the entire business, not just the IT that we're focusing on today. This will help you understand your company's exposure to various threats and hazards. And I'm sure there'll be many more to consider once this is all over. Typically, risks can be categorized into three principal areas. These are technological, which are accidents or failures of systems and structures such as fires and utility disruptions and accidental hazardous material releases. We've got the human-caused ones as well, so intentional acts like cyber and terrorist attacks and war and sabotage. And then we've got the natural acts like floods, hurricanes, earthquakes, and of course pandemics that we're experiencing today. Although many of these threats and hazards will appear to be low risk, there are several that occur more frequently. For example, floods and fires and cyber attacks are widespread, so you should consider these as a priority. And of course, every business is unique, so something that may have a major impact on your business may not be a concern to others. But we start by identifying as many risks as possible, regardless of how trivial they may seem. We then rank them by likelihood of occurring, but this will be determined by the characteristics of your business and where it's located. Normally, you give it a rank of 1 if it was very unlikely, and up to 5 if it was highly likely to occur. And then we look at the impact of each of these risks that they could have on the business. This is typically a monetary value, usually based on the number of predicted business days lost. However, consideration should also be given to other factors such as compliance requirements and any reputational loss. Once you've ranked all of the risks and assigned a monetary value to the impacts, you multiply the likelihood by the impact together, and this then sets the priority. From this, you will be able to decide on the high-risk areas that should be addressed first. My clients often say to me, but how much should we spend on continuity planning and disaster recovery strategies? Well, unfortunately, there's no estimates or guidelines for this. How much you spend should be based on the unique requirements of the business, although you should consider how much the company can afford to lose. Above all, be prepared. A risk assessment is the first step, but once you've completed this, for each of the risks, you should consider how you will respond. And these are typically prevent or avoid, so stop the risk from occurring in the first place. Protect or mitigate, have some controls in place that limit the risk. You can transfer the risk, that's to outsource it or let a third party worry about it, or you can just accept it. If the risk is so unlikely to occur, or perhaps it's cost prohibitive to do anything about, then you just accept that it may happen. You should, of course, have plans in place to tackle the risk if and when it occurs, and this should include a response plan, how you'll respond to the risk, and a recovery, how you're going to return to business as usual once the risk is resolved. And one final point before I say goodbye is that with any major event, fraudsters are taking advantage of this pandemic and sending out a flurry of phishing emails. Now, staff should be already aware of cybercrime and how it can impact a business. But now I think it would be certainly a good time to remind them of the things to look out for. We've seen quite a few phishing emails, typically around claims that have been made and how they need to respond with URLs that you click in the email. So it's important to be very vigilant and remind your staff that there are fraudsters out there trying to take advantage of some of the hard times that businesses are going through. So that's it from now. I just have a look, see if there's any questions here about IT. I will have a look at those in a moment, but I'll now hand you back to Nigel.
Brilliant, thank you, Gavin, and thank you to everybody. Thanks to Richard and Greg and Gavin for that really informative session. So I know that certainly questions have been coming through, and I think we've answered sort of most of those. And also, if there are any sort of subsidiary questions, then if you can email the organisers who sent out the links earlier on, that would be great. So thank you again. There will be a recording of this session, probably available from tomorrow, so that people can catch up or go back over or clarify everything that was discussed today. So it just remains for me to say thank you again to the presenters, and thank you everybody for tuning in. Okay, bye-bye now.